Hello everybody, this is Bitcoin Macro, and on this video guys I'm going to talk about the current situation on Bitcoin and Ethereum, and this is going to be the first video I'm going to make today because I'm going to make a second one where I'm going to talk a bit more about models and stuff like that outside technical analysis, and I'm going to touch the traditional markets as well in that video. But on this first one, it's just going to be Bitcoin and Ethereum and just in general the market. I'm not going to go really deep on any of the other altcoins because I don't really see that many interesting things right now. We're in a kind of a weird situation, so I would just prefer to analyze the key components of the market. But before I get into all that stuff, guys, please like, share, and subscribe. Click the bell icon so that you can get more videos like this. Bear market or not, I'm gonna keep on putting out some good content so that you guys can have a better understanding of where we are right now. So starting with Bitcoin, guys, what has happened over the last few days? We had this correction, and it's something I've spoken about quite a bit. I've been more bearish than bullish during this period, maybe a little bit neutral at times because I kind of don't really know where this wants to go. I'm a bull at heart, like I'm very bullish on crypto long term, so I try to be as objective as possible and kind of just try and see the situation for what it is. And overall, what I would say is that this death cross of the 50-day moving average and the 200-day moving average is definitely not bullish, especially when it comes after a really big bull market. I shouldn't say big bull market, at least for Bitcoin it was relatively short, and for altcoins as well. However, we have to be aware that the market has grown and that we went up way too quickly. Now, the other thing is that whenever I have seen the 300-day moving average get tested so many times, it usually breaks down, and we have seen it break down and actually close below the 300-day moving average, but we have quickly seen the price come above it, which is kind of bullish. At least it gives hope in the short term. So overall, what I would say is that we have been in this range, which goes from 42k all the way down to 29k, because we've also had these lows over here. And this is an average that I'm using, guys, that I have created using only spot US exchanges without actually using perpetual swaps or anything else in here. Now on some other markets, which I'm gonna show you guys very soon, where I'm just actually gonna do it now, the price actually had gone below this level on several exchanges, actually on some pairs, even on spot exchange pairs like US exchange pairs. We had gone below these lows right here at 29k, which is very, very important because that was a double bottom that wanted to be broken, that was meant to be broken, because that was where most liquidity was. Now, the fact that this had been done on some exchanges and not the rest was kind of an indication that this was probably going to happen again, because usually the markets, when they have an anomalous drop, then they tend to revisit it. And what I mean by this is that some exchanges bottom at 30k, others at 29, others at 28. So usually the markets tend to go back to those levels and retest that area. So this one, though, at least on the perpetual swaps and some other exchanges, it is a quadruple bottom. Okay, it's 1, 2, 3, 4 touches. Now on some exchanges recently, this low was lower than the one on May 19th. On some others like Binance USDT perp, it actually went slightly higher. It didn't go below it, so there is a double bottom on Binance, but it's not as important as the rest. So let's go back into the spot exchange, because in my opinion this is the one that matters the most. And like I said before, we have gone above the 300-day moving average. So at least for now, and for as long as the market closes above this average, I think we're still in good hand, or like potentially this could go higher. How high? Look, I'm not gonna say that this is going to be the end of this mini bear market or bear market, you can call it whatever you want, because look, if this is a range, Bitcoin could go back up to the middle around 37k and then drop lower. Bitcoin could also go all the way up to 43k, which is where the 200-day moving average is, to take this high the same way it took out this low, Bitcoin could come up all the way to 43k to take this high and then go low. Because look, first we took out that low from the 23rd of May, so Bitcoin bottomed at 31k again, like slightly below the one it had on the 23rd. So on the 8th of June it had a slightly lower low, and then what did it do? It went to the one on the 26th of May at around 41k and swept that high. So there was an SFP, and that's what led to this big drop. Now this drop was another 30% drop, which is quite a bit given the fact that it happened in about a week. So it's not abnormal, in my opinion, for this to kind of have at least a relief right here. Now, if it starts closing below, I'm not gonna be very bullish, guys, because this could easily happen, and I don't really believe that another retest of 29k will hold the price. Maybe just a relief rally, but after that I do believe we are going to go low. And for now we have been rejected here at the resistance level at 34k. So it's not like we are completely out of the woods. Like, the only thing that I can say is that I have been bearish mostly, but I should just be a little bit more neutral here and be a little bit more objective. Because look, I have been bearish for quite some time because of everything that has been going on, but I am realizing that this is a different cycle, okay? This is a different situation. So I am trying to see different occasions where I could be wrong and potentially things be different than the previous time. So although we have the death cross, although we have the 300-day moving average get broken, we have also seen though that after these touches on the 300-day moving average, and even when it breaks, the price can actually have a bounce, a really strong bounce. And I'm going to talk about this on the other video as well, where I'm going to analyze some models and other stuff, and even talk a little bit about the 350-day moving average. So usually we know that the market gets into the cross, but because of everything that has happened with El Salvador, with MicroStrategy, and now with China, this has been a little bit more choppy. There have been a few things that have happened that have affected the market overall. But let's be honest, guys, this correction was going to happen overall. Yes, Elon Musk and all those things have played a role, and especially like Elon Musk saying that we haven't sold our Bitcoin and so on. But the situation with China is a little bit more odd, because currently we have seen half of the hash rate leave the network, which does leave Bitcoin open to some extra FUD. Now, once the miners leave China, then there will be other issues, like depending on where miners go. And the problem is that most of them will probably go to the US, which then creates another problem. But these are things that will happen with Bitcoin in general. And hopefully the more time passes, the more decentralized mining will get. But leaving that aside, we're still in this range. The market is still in a bear trend because we have been making lower lows. The only actual higher lows and lower highs were made here, slightly though, because we didn't really break above 42k. So we're still in a bear trend. For now, we have a death cross, we have like all the negative stuff. And if the market breaks below 29k, guys, all the way down to 14 and even 12k, it's open air, because we didn't really stay in those areas for long enough, and we have had those major gaps. So once that head and shoulders pattern completes, if it completes, then that's going to be very bearish, because all the people that have been buying in this area will be at a very huge loss. Okay, so if the market has already dropped 60%, like when it breaks 29k, it could easily drop another 50% from 28k, or another 60% and go down to 14 to 12k. That's very clear, guys. Like, if we go below this, there is no going back. But let's have a little look at the pivots right now and where it could be sitting at the moment. And for now, we're still below the volume profile point of control, which is essentially at the middle of the range. We're still below the monthly pivot. We're still below the weekly pivot. And the price could actually, for now, come to this level up here, which is like a little magnet. The pivot here and this pivot right there, which wasn't really touched. The monthly pivot at about 42k. Because also this is the price that the market has been used to testing. Now on this drop, we actually found support, like I said before, on where the perps had bottomed and where we swept all the other lows on other exchanges, on other spot exchanges, but it was also the S3 and S1 pivot right here. So it actually found some support on those pivots as well. So it was a nice combo of support. And if the market comes up here and then gets rejected, it will be pretty normal, because that would be, we have the pull into the cross, which we haven't had because of all the China news. And then we would also test the point of control once again, maybe come a little bit to 37K, which is the key level right there, and then go lower. Now, if it starts going higher, guys, like I said before, we could sweep all those levels and then still go lower. So on the upside scenario, I think it would need more time. It would probably play a lot more slowly. But on the downside scenario, I do feel like if we go down again, it's probably going to accelerate to the downside, and it won't really take much longer before the market starts crashing. There is, like I said before, there is some hope, because reclaiming this level right there and closing straight above it was also pretty important, because it wasn't only that we swept the lows at 28, 29K, but we also swept the lows at 31K, and then the market went higher pretty quickly, had a strong bounce. But of course, like I said before, there is that resistance that we have to be careful, and there is a lot of resistance above as well. So until we really see the market show strength above 43K, I remain very cautious. So I am trying to be as bullish as I can. I'm trying to be as neutral as I can, given the situation, and we have seen some positive stuff, but it doesn't mean that the situation is very clear. This could be accumulation, but who knows? And that's why I'm going to make this second video where I'm going to talk about more of that stuff. Hope it's been clear so far, guys. And you know, even if we drop below, of course there will be support, and I have to be very clear on that. There will be some support between 25, 20K, 18K and so on, but these will probably be just giving some bounces rather than be the bottoms for that range. Now, if I try to picture this just like Bitcoin going up like this, it's very hard for me. So either we'll probably see more chop and then higher, or we are going to see the market go down. Who knows? Bitcoin can do anything, and it might even break the previous patterns from the previous cycles. But for now, the truth is that there are quite a few bearish signals. And the only stuff that I forgot to mention, which is something that I should have spoken about the previous time, guys, is one, we actually went all the way down to the bottom range of the of the Bollinger Bands on the weekly. So if I have a look at these are the weekly bands, and I have adjusted for them by multiplying with the right numbers. And this is the typical Bollinger Band. We hadn't really properly touched it, although we had come very close to the bottom of the band. And this time the market actually fell below and then went right above. Now the market had spent most of its time above the upper band of the Bollinger Bands during the bull market, and once we started closing below, we started seeing the slowdown. And then once we started breaking the middle point, it had already been pretty late, because as you can see here, this has been flattening. The Bollinger Bands have been flattening, and if they start going down along with the price, that's going to be pretty bad, because the price could actually stay outside the band for quite some time. Now for Bitcoin, it usually is a good place to buy on those bands. At least you can see it here. It was a good opportunity back in March of 2020, and even in November and December 2019. But during the bear market of 2019, initially the market found support in June of 2018 on the edges of the Bollinger Band, but at some point if the market broke below and stayed below the Bollinger Bands where it had the 50% drop. So the same thing might happen like what happened in November 2018 here as well, but for now we have had some extra support from this. The market has been oversold. And the other one that I'm using is the daily Bollinger Band, but with a different standard deviation. So what I've used is the 3.7 or about 4 standard deviation, which actually gave another bottoming signal. So it caught the bottom on the 18th of April, the one on the 23rd of April, the one on May, the 17th of May, at least in the short term, and then the one on the 19th of May. Now, since then, it actually almost gave another signal on the 8th of June, and this time around it caught another little bottom. But this doesn't mean that this is a very strong signal or that the market has actually bottomed, just the fact that Bitcoin was actually oversold. And if I have a look at the RSI, we can see that the RSI wants to go higher and it's trying to go higher. It's been making those higher lows. However, this doesn't mean that the momentum is great at the moment, because when it tried to go above 50, it actually failed. It didn't really manage to get proper momentum, although it has been going higher. Like here on the RSI, we are seeing some bullish divergence over here as well. It's still not very clear. So at least for today, I would want to see the market close above the 300-day moving average and the 33k support line if there is any chance for this to continue. Otherwise, things could get very ugly if it starts dropping afterwards. Now let's have a look at Ethereum and close up with this video because it's already been too long. So I'm not gonna talk about Ethereum for much longer because it's already been talked about on Bitcoin. There isn't too much to talk about here. And the main thing that I would say is that Ethereum has clearly broken down. It has also lost this diagonal. Usually I have never seen anything bottom like this. Although we have swept the low, I have never really seen the RSI and the price form a perfect almost double bottom. Although this is a lower low like this and then the market not go lower. So we can also see something similar. I'm gonna use the Bollinger Bands over here on the 4 hour. Apologies about that. And as you can see, the market has been rejected around this level right here, and it doesn't really look all that great because this was support, now this was also support, and it has turned into resistance. Now the Bollinger Bands that I'm using spotted the bottom perfectly on the 23rd of February. They spotted the bottom perfectly on the 19th of May, but this time around it almost missed it by a bit. These will probably give good places for relief bounces if the market keeps dropping, and this could be like targets for your shorts or a little higher than this to be sure you're gonna get filled. But if we are in a bear market, we are potentially going to see the market keep going lower and maybe at some point get outside the Bollinger Bands. But usually the market stays within the bands, within those bands, and as you can see here, this is a very good way to spot tops and bottoms even during a bull market. Okay, this is a very great tool that I have forgotten to share once again. I had stopped using it because there weren't that many signals during the bull market. However, now that we are dropping, this might be a great tool once again, now that volatility might pick up again. But even if it doesn't pick up again, it's good to keep an eye on that stuff. Now again, we are below this diagonal. The trend has been breaking. Retesting those lows is not great because it's just another indication that we are probably gonna keep on going lower. However, for now, the Ethereum price has stayed above the 200-day moving average. It's the first test on the moving average. It broke below but quickly came back above. So for now, there is still some hope. But for me to just assume that we are gonna go higher, we should break above 23k, maybe retest this and then quickly come back above 23k, because that's where this key resistance is. That was the last resistance before the final drop to this level. So yes, this whole area from 2000 all the way up to 2200 is resistance, but the main resistance is in the 22.7, 2070, 2270, and 2300. This is the key little resistance. So if something has to happen, it has to happen quickly, guys. Yes, this is a normal pullback so far, if we assume that there is some strength in this market, and it could go lower if it has bottomed, but it has to act pretty quickly. Otherwise, guys, in my opinion, for Ethereum, it's gonna go down to the previous all-time high, find some support, along with Bitcoin going to 25k. It will potentially come back to 1,700 and then go lower again. I do believe that if we start breaking down, guys, potentially the bottom is going to be anywhere in the $400 range, all the way up to 700. Somewhere around there, it's going to be the bottom if we go lower, because look, this looks like a proper bubble. If it's different, if this time around this is not the typical bull bear market for crypto, then yes, things could be different. But for me, I'd rather be a little bit more cautious rather than get caught off guard and this going much lower, because I don't really believe that Ethereum is going to test the all-time high again and then not break lower. Now again, it's similar situation with Bitcoin USD and Ethereum USD. They don't look great. They have broken down. They are holding above some key moving averages, but the situation doesn't look great. And the final thing that I'm going to talk about is the Ethereum BTC price, which definitely doesn't look great. The price of ETHBTC keeps going lower, no strength. It just keeps on bleeding. And this is a very important sign, guys. Altcoins have been bleeding very badly versus Bitcoin. So although Bitcoin has been pretty much at the same level, it has been for quite some time, and as had shown some strength initially, where they had gone up to some very nice levels. They almost retraced versus Bitcoin the whole drop, but then they actually started losing more and more speed while Bitcoin was holding its ground. So recently, essentially, alts went back to their low versus Bitcoin that they had on the 23rd of May. And essentially, that was when Bitcoin was back at 31k. Now, if Ethereum starts losing more ground, regardless of whether Bitcoin goes up or anything, I do believe Ethereum will bleed versus Bitcoin, and it could eventually get all the way down to 0.04 and even 0.03 once again. And then it would potentially go higher. But until then, I do feel like Ethereum has more to lose, and it doesn't look very strong versus Bitcoin. I would have to see a lot of strength for this to change. Now, maybe it bottoms at 0.05, and then who knows, maybe we have a resumption of the bull. But from what I have seen from Ethereum, in my opinion, it will drop lower, and it could even go to as low as 0.027, depending on how bad this bear market is, if again we are in a bear market. So that's it from me, guys. Thanks a lot for watching. Please remember to like, share, and subscribe. You can also follow me on Twitter, Telegram, and TradingView, where I've been sharing a lot of content recently. If you want more of that stuff, more quick updates, you can follow me there. And you can, of course, reach out to me by sending a DM on any of the social media. So that's it from me, guys. Thanks a lot for watching, and I'll see you on the next one.